Hi friends, welcome to my YouTube channel Invested. My name is Joseph. Previously, I have promised my audiences to talk about dividend and growth investing. So here we go. So what is dividend investing? It is a popular investing strategy for folks looking for passive income while dividend payments from a public company to its shareholders. Growth investing is another investment strategy that focuses mostly on increasing an investor's capital. Growth investors typically invest in growth stocks. That is, young companies whose earnings are expected to increase at an above average rate compared to their industry sector or the overall market. So you may ask, which method is better for you? I look at this question as if someone is asking me whether they should pick meat or vegetables as a meal. In order to have a well-balanced and nutritious meal, you should really consider both. However, each of these investment styles will require an entirely different skills and mindset to profit. Each has its own pros and cons. But if you can allocate both in your portfolio efficiently, they will complement each other and help you build a more diversified and well-rounded portfolio with decent returns for years to come. The proper allocation percentage depends on your own situation and age. Typically, dividend stocks are generally considered to be safer and more bear market proof. Growth stocks are typically more risky, but also with a better growth potential. So, if you're younger and can afford to take more risk, then you probably want to allocate a larger percentage toward growth stocks. Otherwise, you may wish to allocate more toward dividend stocks, especially if you are closer to your retirement. Obviously, to get a truly diversified portfolio, you should also consider adding some international stock and bonds to your portfolio as well. Since this video is not about diversification, I won't go into detail about it. But if you wish to learn more about diversification, leave a comment below and I'll try to cover that topic in my future videos. If you're enjoying this video so far, please hit the like button, subscribe to my channel, and turn on the notification bell. It will truly motivate me to keep producing this type of video in the future. Now, let's take a look at some of the pros and cons of dividend investing. The pros of dividend investing are: number 1, generate passive income. Dividend-paying companies distribute a portion of their net income to holders of their stock regularly. Number 2, take full advantage of compounding. Compounding is a powerful way to increase your income by using earnings to generate even more earnings. Number 3, invest once and profit twice. When you invest in dividend stocks, you stand to profit in more ways than one. Now some of the cons. Number 1, less price appreciation than growth stock in general. Dividend-paying companies are typically more mature and already done its growth phase. Number 2, companies can slash or eliminate their dividend at any time. There is no guarantee that company must pay its dividend to its shareholders. If a business is not performing well, they can eliminate or reduce the dividend at any time. Number 3, tax rates on dividend income can rise. Current tax rate for qualified dividend income is capped at 20%, but policymaker can make it higher anytime. Now let's switch and take a look at growth stocks. A single investment in a big winner can make you rich. Timing your investment in a growth stock is not critically important if you can buy early enough in its growth phase. They're fun to own as they consistently beat earning estimates, and their stock price are generally on a staircase-like uptrend. Everyone likes good news, and this company delivers plenty of it. Some of its pros are above average returns, and a single investment in a big winner can make you rich. Now some of these cons. Growth company typically has a higher price valuation. Also, growth stock almost always has higher volatility versus dividend stocks. Now, let's check out a performance chart of the S&P 500 Dividend Aristocrat versus the overall S&P 500. The S&P 500 Dividend Aristocrat includes stocks with a full adjusted market capitalization of at least $3 billion and an average trading volume of at least 5 million. In addition to consistently increasing dividend payments, the index typically contains 40 to 50 companies. As you can see, the Dividend Aristocrat generally outperforms the broader S&P 500 company throughout the years. For folks who simply don't like picking individual stocks, ETF can be an easy way to achieve similar results if you're inexperienced. For growth ETF, I like the Vanguard S&P 500 Growth Index Fund ETF. Ticker symbol VOOG, with a super low 0.01% expense ratio and an average annual return of 14.42% within the last 5 years. For dividend ETF, I like the Invesco S&P 500 High Dividend, Low Volatility ETF. Ticker symbol SPHD at its current price. It pays a 5.62% yield currently with a 0.30 expense ratio. But there are many ETF choices out there. The 3 most important things you need to pay attention to are its expense ratio, its growth and dividend history, and how good and experienced the fund manager is. So, be sure to make your own educated decision accordingly. As of today, I personally has around 50% of my portfolio in dividend stocks, about 15% in growth stocks, 5% in the Asian market, and the rest in cash. Your situation may differ a lot than mine, so please allocate your own portfolio based on your own needs and risk tolerances. If you haven't already, please hit the like button, subscribe to my channel, and turn on the notification bell so you won't miss any upcoming video in the future. Thank you for watching and happy investing. Hope to see you soon. Goodbye.